let's look at the stock real quick, and then let's dissect it really quickly. I fly United a lot. Um, so $74. Okay, it's down slightly. Last 6 months, it's been a dog. This year, it's been a dog. Last year, up 47%, though. Look at that. Last 5 years, it doubled for you. That's nice. Okay, so it looks like a very volatile kind of stock. Um, Selling cover calls is great for stocks like this because you're able to make money even when everyone else is losing money. The price is $74. So if I was to construct a strategy on this stock, what I might do is I don't think there's anything special about United Airlines from a cover call writing strategy, but I don't know. Let's look at it. Let's take a look. All right. So all right. So United Airlines. The, you always start with the stock price. And by the way, if you can't read what's on the screen, just be patient. Sometimes it takes a minute for it to come up. Um, okay, the price is $74.79 or $74.49. Okay. So let's just buy, let's pretend like we have money and let's buy 1,200 shares. The cost would be, now remember, you could buy 120 shares. You don't have to buy 1,200 shares. So if the numbers are big, don't get intimidated by big numbers. Just we're being aspirational here. That's 89,388. Okay. So that will be my first step, right? So then I kind of look at that and I say, okay, what do I want to do? Let's see, I want to sell calls. So first thing I might do on the stock like this, because it's so volatile, is I would definitely look at put options. So the next thing I would do is I'd buy me a put option to like insurance. I get my insurance on the stock. And what put would I pick? I don't know. What put would Boyce pick? I would buy a January 16, 2026 put with a strike price. I'd probably pick the price is 74. I'd probably pick a strike of maybe 67.50 because that's what's on the menu. And the cost would be $7.85 per share, or for 1,200 shares, it would be that's 12 contracts, $9,420. That's if I want to be super safe and I want to protect myself from a disaster. So if this stock collapses, and here's what would happen. That's another thing I wanted to mention. If the Israelis block the Strait of Hormuz, American Airlines is going to plummet. American Airlines, all the travel stocks will get hammered. So if you believe that this war will escalate and that the Israelis are going to just get crazy, then a bearish position on airline stocks might be a way to express that sentiment. Remember, when you're talking about generating income from the call options and everything else, you have to ask yourself those fundamental three questions. I'm going to go through them again so that we can be reminded. One, what do I believe? What do I believe is going to happen? You may be wrong, but what do you believe? Number two, what am I afraid of? What are the things that can hurt me? These are the things I have to hedge against, right? Am I afraid the stock's going to shoot up and I'm going to miss out? Am I afraid the stock's going to collapse? I'm going to lose money? Am I afraid that I'm not going to get as much income as I want? Am I afraid that this is going to be the wrong stock? Like, what am I afraid of? And then also, what do I want? Like, where do you want to be? Okay, if American Airlines blasts off and does well, then that means if I want to be there, then I have to invest in that. If I believe American Airlines is going to drop, then what do I want? Well, I want to make money if the stock drops. So I might buy put options, or I want to be protected if the stock drops, which would still be a reason to buy put options. So that's just a variable to consider. Okay, so I would put up about $9,420 for the puts. And let's say I want to sell a weekly call. Okay, so I could sell a call. Um, let's put the date, June 20th call with a strike of, mm, let's go to, drum roll, please. Um, if I use the 3% rule, I'm going up to about maybe 77. Let's do 77. $77. So my income would be 89 cents per share times 1,000 shares, or $890.